Today, we are diving into something that might sound a bit dry, but trust me, it's going to blow your mind. We are talking about the business cycle. I know what you're thinking. Business cycle, well, that sounds boring. But hold up. This stuff actually affects your daily life, from the job market to the price of your favorite latte. So let's break it down together, shall we? Okay, so what exactly is the business cycle? Well, imagine the economy is like this giant roller coaster. It goes up, it goes down, and sometimes it loops the loop and makes you want to throw up. That's basically the business cycle, the natural ups and downs of the economy over time. Now, why you should care? Well, this cycle impacts everything, your job prospects, your savings, even how much that new iPhone gonna cost you. It's kind of big deal, huh? All right, let's dive into the five stages of this economic roller coaster. So buckle up. First up, we have got the initial recovery. This is the economy's hangover cure after a recession. Jobs starts coming back, prices might drop a bit. It's like economy is saying, what happened last night? Let's get some coffee and sort this out. Next, we have got early expansion. Things are looking up, more jobs, more spending. It's like the feeling when your paycheck hits and you're ready to treat yourself. Then comes late expansion. This is full on party mode. Jobs everywhere. Everyone's spending like crazy. But watch out. Prices starts creeping up too. After that, we hit the slowdown. The party is winding down. Folks are getting nervous. It's like when the lights come on at the club and you realize it's 2 a.m. And finally, we have the contraction, aka recession. Yeah, this is not so fun part. Job losses, less spending, and businesses struggling. It's tough, but remember, it's all part of the cycle. Now you might be wondering, okay, cool story, but how does this affect my money? Great questions. Let's break it down. During the initial recovery and early expansion, stocks are usually on the rise. It's a great time to invest, especially in smaller companies that might grow fast. In late expansion, things get a bit trickier. Blue chip companies, the big stable companies, often do well, and weirdly enough, so does gold. So go figure. When we hit the slowdown and contraction, it's the time to play it safe. Cash becomes super important, and government yield typically do well. Now, don't freak out. The key is to remember that this cycle keeps moving. It's not about the timing perfectly, it's about having a mix of investments that can weather any stage of the cycle. So, there you have it, folks, the business cycle in a nutshell. It might seem complicated, but understanding it can help you make smarter money moves. Anyway, that's all for today's economic roller coaster ride. And hey, drop a comment letting me know which stage of the cycle you think we are in right now. Let's get the discussion going.